Markus Rosgen is Chief Asia Pacific Strategist for Citigroup, and he's here with me now. Markus, thanks for joining us. So it keeps on going.
Yep. Good morning. It keeps on going because still plenty of value. Central banks still providing liquidity, and as long as there's value and there's liquidity, the path of least resistance is up.
Okay. And what sort of impact are we going to have with more liquidity coming into the system? I think we've got another 500 plus €1 billion being added to the system in that long-term refinancing operation.
Yeah, I mean, the interesting thing about the LTRO is that a lot of the money has actually gone back into risk assets, and so it's clearly going to be positive for European bonds. But it's good for European bonds, it's good for risk-taking, and so equity markets, we think, are going to continue to go higher. And the drivers continue to be very much you buy value, you buy risk, and for the moment there's still a majority of investors that are underweight both value and risk. Okay. And so pain trade is up.
But, you know, nothing goes in a straight line. We've got to have a gut check at some point. Are we anywhere near that, do you think?
No, I mean, you know, the key is really going to be the results, first quarter results. If they continue to be bad, and if companies continue to come out and say, look, you know, life is really tough, we're not making any money, then clearly you're going to be setting yourself up for a pause. But for the moment, you know, things continue to look good. There is no real excess in the equity market. And as long as there's no real excess, you know, path of least resistance is up.
Well, this is what we're looking at. EU ministers approving this Greek bank backstop. It's not as clear-cut as all that. There seems to be some murmurs about Athens not being trusted once again in the implementation of the reforms that they've promised. Could that again come and haunt the markets?
I think, you know, the market's kind of moved on from Greece. People are getting bored of talking about Greece, and therefore, you know, it'll be probably a short-term one-day correction on the back of it, and then people say, okay, look, we've got LTRO, we've got RRR cuts coming, the Fed is continuing to be very easy, you've got the BOJ targeting 1% inflation. All in all, that's going to be enough, and if confidence comes back on the back of it, you're going to get better growth numbers. If you get better growth numbers, and equities can continue to look very attractively valued.
Yeah, Markus, I mean, when we look at the economy, I mean, we know that Greece is now pretty much a known factor. We know what the targets are, where we are, essentially. But one thing we don't know about is what happens next with oil. And the oil price is something which could really affect what's happening in the trading sessions.
Sure. I mean, the interesting thing is if you actually look at the correlations between oil and Asian markets, they're actually positively correlated, because what normally happens is oil prices go up because there's growth. If there's growth, there's profits. If there's profits, markets go higher. So as long as oil is going up because the global growth environment is actually stronger than expected, you had better numbers.
But is it that, or is it actually the uncertainty revolving around Iran?
Well, I mean, you had better numbers out of the US, you know, yesterday. So clearly, you know, from that perspective, US growth was stronger than expected. Some of the leading indicators, again, are telling you that things are getting better. PMIs in China are improving. So there is certainly a growth component to it. I'm not saying that, you know, Iran doesn't play a part, but it seems to be also that growth is stronger. And if growth is stronger, oil is higher, and Asian companies can pass it on. At least that's been the history of the last 20 years.
Markus, thank you so much for your time.